What do you mean shredding isn't covered? The policy clearly says all damages pertaining to comedic injuries regardless of malicious intent. Not funny. Shredding isn't funny. Wait, are you serious right now? You know what? You know what, actually? I will come to your house and shred your entire family, and you will see how— wait, no, it's not a death threat. That's not a death threat. They hung up. They shrieked and then they hung up. God, puppet insurance, am I right? We hate it, but we can't not have it. Just like the puppets themselves, always shedding their felt on the rug. Yes, they shed, and not just felt. Other things too. There's lots of other things. But again, we gotta have them. We gotta insure them. Even if you don't have a puppet, the insurance might affect you. Puppet insurance is everyone's concern, which is why we're gonna talk about it today. So, home insurance says home insurance. Well, that's also important and fun. Just as fun as puppet insurance, please, I promise. Home insurance is everyone's problem, even yours. Please stay. This is actually really interesting and insidious. I promise you will be furious by the end. If that's your kink, then, I got you, pal. But of course, here's some news. Thanks to YouTube's neural analytic particle brain laser, we know a shocking amount about our audience demographics. And so yes, we know that over a third of you don't own a home, and 20% of you don't think you ever could. Also, you're all gonna die in exactly 23 years because of the laser. But the thing about home insurance rates is that it's absolutely still going to affect you even if you rent. For one, what do you think that rent is partially paying? And two, it's going to factor into your chances of ever buying a home. And three, well, we'll get to three. Unrelated note, there sure are a lot of natural disasters happening. Los Angeles was on fire not too long ago. Not in a cool way, like it was dunking a basketball either. Also, hail-infested 80-mile-per-hour tornadoes have been ripping through the Midwest. And then there was that thing. Whatever the most recent thing is that we can just, put up on the screen. Can you believe that thing that happened? And another totally unrelated note, home insurance companies across the United States are suddenly raising their rates or just flat out dropping their coverage for customers. For some reason, everywhere.
The average Florida homeowner pays about $2,000 more than the national average just to insure our homes.
This paired with concerns as the state is implementing a new reform plan that analysts say could raise insurance premiums by 40% on average. In fire-prone areas, that could be up to 100% or more.
We discovered last year alone, Texas homeowners insurance companies asked the state to approve double-digit rate increases more than 150 times. So far this year, they've asked for 74 more.
In North Carolina, homeowners insurance rates are going up. In fact, in June of 2025, they go up, and then again in June of 2026.
The cost of owning a home right here in Colorado is about to get even more expensive.
Yeah, homeowners insurance rates are skyrocketing, and as we learned tonight, experts say there's no major relief in sight.
Arizona homeowners are facing rising costs and even losing insurance policies as some insurers are pulling out of areas all around our state.
Everywhere, even the cool states. Home insurance, an industry that was already valued at $57.67 billion in 2023, is projected to more than double within the next decade. If my math's correct, that is more than $57.67 billion. These price hikes are causing 7.4% of homeowners to just go without home insurance, assuming they can get the insurance in the first place. That might not sound like a lot, but it equals to, at the lowest estimate, $1.6 trillion in property assets unprotected. But who could blame them? After all, if the rates are high enough, you could just use that money for an emergency fund or get a hot tub. Except there are other reasons we need home insurance, and in a lot of cases, simply can't go without it. For example, if you want to have a mortgage, most lenders require you to also get insurance. That affects both people buying and selling their homes. This similarly applies when you want to take out a loan using your home as collateral too. So yeah, when it comes to homeowners insurance, you're kind of stuck having it unless you fully pay off your mortgage, don't plan on moving anywhere ever again, and are willing to pay out of pocket for any damages that happen to your home. You know, if you're Batman rich. And again, as we already mentioned, this increase doesn't spare renters either. The homeowner's insurance crisis trickles down like that moldy splotch on your shower ceiling that feels like gravy, smells like gravy, but definitely does not taste like gravy. Trust me. Not to mention that renter's insurance is also getting the same treatment, as in raised rates, less coverage, or getting outright dropped by providers. It should be noted that depending on where you live, some apartments will require you to get renter's insurance as part of the lease, effectively raising rent, on top of the rent increases for all the other stuff, which again often includes your landlord's home insurance. It's a Russian nesting doll of scams, much like that playground casino I briefly opened until cancel culture struck again, always with the cancel culture. So to recap, most people have to get home insurance, which is now skyrocketing and or rejecting customers, creating an inescapable financial hell, much like my child-sized casino. So why the increase in rates? I mean, greed, of course. There's always that. Also, inflation, obviously. Also, a third really grim and obvious thing. But then there's the other grim and obvious thing. A lack of regulations. Boy, it's all pretty obvious and bad. But in an unreasonably priced one-bedroom nutshell, state regulators don't wield much influence in how much insurance companies can charge and what coverage they offer in their state. See, insurance is mainly a privatized industry for some reason. So if state regulators play hardball too much, these insurance companies would simply threaten to pull out of the market. Because for, again, some reason, we designed a system where private and national corporations hold institutional power while insisting that their regulations happen at a state level. That seems stupid. Might have something to do with the insurance companies fighting to keep it that way. And so, think of these state regulators like how Commissioner Gordh is with the Joker, Marge Simpson is with Bart, or how Chuck Schumer is with Republicans, just showing up to hope they don't do the most evil thing lest they wag a finger while they do the most evil thing. Yeah, wag all your parts, Schumer. All of them. So, thanks to that lack of regulation, companies don't have to disclose what they charge for insurance. And yet, researchers found that low regulation was the main driver of homeowners insurance premium costs. Gee, that's probably why they don't want that information tracked. To put this into perspective, lack of regulation factors in more than risk, meaning that homeowners in low regulation states are paying far more in insurance premiums than those in high regulation states, even if their level of risk is similar. To put it even simpler, the amount your insurance company will charge you is mainly based on how much they think they can get away with. That's it. And since these are often national companies, they are thinking about it nationally. What I mean is that if you're paying a higher price for homeowners insurance in Oklahoma, it's likely so the insurance company can afford to provide coverage for homes in California. They're offsetting costs and dumping them on less regulated states. Seems like a really bad system when you stand back from it like that, or close to it. Really, any distance actually looks not great. It's also worth noting that just because a company lowers insurance rates in an area, it doesn't mean there's less risk or more regulation. That would be too simple and not sinister, you see. No, sometimes they're encouraging would-be homeowners to build and live in homes in dangerous areas with high risk. A First Street Foundation report found that 39 million homeowners weren't paying insurance premiums that reflected the full risk of fire, wind, and flooding to their house. Basically, they lowball their risk assessment in order to lure people into an area, trap them into an insurance plan, and then raise the rates to reflect the actual risk. Like a clown luring a child to a roulette wheel, hypothetically. Assuming, of course, that they don't just bail on that area anyway. Because again, these companies can just bail on you if things get too hard. Like a shitty stepdad, they can just leave, for reasons. I'll give you a hint. It's climate change. Insurance companies know that climate change is real and a thing and are pulling out like we're all Tom Cruise filming another Mission Impossible. That's kind of what this episode is actually about, and we had to hide it in the much more thrilling subject of insurance rates. But basically, our world is dying, and the first people to actually act are the corporations most affected in their bottom lines. If there was ever more clear evidence of climate change, it is this. Kind of like how Trump, that president, likes to deny climate change while putting seawalls around his golf courses and eyeballing Greenland and Canada in case the planet warms for some mysterious reason. Like, these are people insisting that the boat isn't sinking while simultaneously stacking their money on a life raft. Because it turns out that when an insurance company is faced with the existential threat of increasing natural disasters, they don't really do the right thing. And so after the break, we're going to talk about how corporations and state governments are teaming up to screw over the American people, specific to insurance and not all the other ways that's also happening. So ads now. People ask me all the time. They ask, Cody, when are you going to pass things on to the next generation? You're on YouTube? At your age? I promptly cut those people out of my life. Because I don't need the next generation of anything. Except AG1's Next Gen, which is now one of the most clinically backed greens powders. They went above and beyond the industry standard in testing and have made a great product even better. The new Next Gen formula offers a more advanced, clinically backed formula that fills common nutrient gaps and supports gut health. All in the same easy, once-a-day ritual. It's a young, fresh product that the kids are hip to, just like me. I'm youthful and relevant, and I enjoy my AG1 Next Gen, which totally slaps. See how much it slaps. I'll drink it at the end. Now, clinically backed with an advanced formula, this is the perfect time to try AG1 if you haven't yet. I've been drinking AG1 for an entire generation now, and I'm so happy to be partnering with them. So subscribe today to try the Next Gen of AG1. If you use my link, you'll also get a free bottle of AGT3K2 and AG1 welcome kit and 5 of the upgraded AG1 travel packs with your first order. So make sure to check out drinkag1.com/more news to get started with AG1's Next Gen and notice the benefits for yourself. That's drinkag1.com/more news. No cap. It's a pouch. You just tear it open, so you don't need to worry about a cap. Anyway.
Mother's Day! It is the time for mothers to get their flowers. And not just figurative flowers, but literal flowers. And when it comes to flowers, there's only one place that I trust. 1-800-Flowers.com, a literal website that delivers fresh flowers at a great value. 1-800-Flowers.com provides high-quality flowers all year round, but Mother's Day is truly their time to shine, figuratively. Obviously. Their lilies, tulips, and roses are off the chart beautiful. Your mother, grandmother, sister-in-law, who is a mother, and even the mother of your own children will love them so much they'll be positively electrified with excitement. Not literally. That would be terrible. Come on. And right now, when you order 1 dozen roses, they will double it to 2 dozen for free. I just want to interject and share a quick anecdote. Last weekend, I was going to my friend's birthday party and I was thinking, I should stop and get her some flowers. And then all of a sudden, I had a delivery and 1-800-Flowers had sent me flowers. So I got to give her those flowers as a gift and she really loved them. They were freaking gorgeous. Anyway, just trust me, trust my friend. When it comes to 1-800-Flowers.com, they always deliver, both figuratively and literally. To claim the Double Your Roses offer, just go to 1-800-Flowers.com/news, where the word news is in all caps. That part's very important, I guess. The internet cares about this stuff? Anyway, that's 1-800-Flowers.com/news, all caps. It is perfectly simple, my sweet little figurative babies. Or I guess literally, if you're a baby watching this. Send your mom some flowers, you baby!
Spring is in the air, and now that I'm doing more outdoor stuff like rollerblading, which is making a big comeback, I need a deodorant that packs a punch lest I offend the other bladers. That's why I use Mando Whole Body Deodorant, which I apply basically anywhere that needs it after a tough session on the roller bees. Pits, feet, undercarriage, I do it in the bathroom at Starbucks. Don't be weird. I'm not being weird. You're being weird. So don't be. And doing so makes me feel like I could blade all day, since Mando products control odor for up to 72 hours. In fact, they're clinically proven to control odor better than a shower with soap alone. Don't take showers anymore. That's not what I mean. You can take showers. Mando's starter pack is perfect for new customers. It comes with a solid stick deodorant, cream tube deodorant, 2 free other products of your choice like wipes, and free shipping. As a special offer for listeners, new customers get $5 off a starter pack with our exclusive code. That equates to over 40% off your starter pack. Use code MORENEWS at shopmando.com, shopmando.com. Please support our show and tell them we sent you. And join me at BladeCon 2025. Most of the people who came last year were dressed like vampires, and that's cool. It's fine. But it's about rollerblading. BladeCon is about rollerblading, which is coming back. Still here. No one can stop me. So to recap, climate change is happening, homes are getting destroyed, and insurance companies are, insurance companies. We should probably take a moment to explain how insurance companies actually make money. There's, of course, the premiums, as in charging money to the customer for this protection. But insurance companies also take your premiums and reinvest them into interest-generating assets. This includes stuff like treasury bonds, corporate bonds, high-yield savings accounts, and the like. More boring money stuff. Not fun underground clown gambling stuff, which is still money stuff, but it's for me, so it's good. The rates they charge for premiums are based on the insurer's assessment of risk, how likely a bad thing will happen, that would trigger a payout to the customer, which is a process called underwriting. And that's, of course, the pickle, because climate change is bad and causing a lot of bad things to happen, and increasing that risk to the point that it's causing massive price hikes, or insurers to pull out altogether. And because state governments are weirdly dependent on these companies, they are either powerless to stop them, or actually helping them screw people over to keep them there. And this is already happening. Florida comes to mind. After needing to pay out so many claims due to hurricanes, private homeowners insurance pieced right out of that state, leaving its state-backed insurer and last resort, Citizens Property Insurance Corp, to clean up the mess. They call it a last resort because Citizens Property Insurance Corp has only the ability to pay up to $16 billion in claims, which sounds like a lot, except Hurricane Ian did $112.9 billion worth of damage. So, last resort, if it's even a resort at all. In response to this, Florida's Republican leaders, including Governor Ron Ted Cruz 2.0 DeSantis, blamed insurers leaving the state on the obvious existential and global problem of lawsuits. They blamed frivolous lawsuits made by people who weren't getting their claims honored, and then passed a bill designed to shield the poor insurance companies from the mean and nasty hurricane victims. See, because when there are a bunch of whistleblowers, you gotta outlaw whistle use, clearly. This is all to say that Florida is one of many states up a creek, and the people in charge appear to be eating the paddles. But good news, they are in no way alone. Even the woke states are screwed. Remember this happening? I sure do.
As we watch the devastating wildfires move through Los Angeles County, it's raising new threats to the state's growing insurance crisis. With more than 13,000 homes at risk, losses could approach at least $10 billion.
Ah, yes, Los Angeles. City of Cody, they call it. California happens to be the most disaster-prone state. Ha-ha! We did it! Suck it, Florida! Eat our piss! Florida! Eat our piss. Just months before the LA fires, thousands of residents were dropped by their insurance providers or experienced record-level premium hikes. Interesting how they already knew to bounce before the fires, probably because of all the other fires before it. State Farm alone dropped 1,600 homeowners policies in the Pacific Palisades in July of 2024. Again, before the fire that would wipe out their homes. And I just want to take a moment to reflect on how fucked up that is. We buy insurance in case something bad happens. So it's weird they're allowed to just dip out when they think a bad thing is coming. That's like designing a helmet to leap off your head when it detects an accident, or a car that automatically locks its doors when engulfed in flames. They are forcing us to pay for their protection and then abandoning us when we need it. Not even the mob does that. Heck, not even the woke mob does that. So then the fires hit, leading to tens of billions in insured losses. Lord knows how much in uninsured losses. And the people with coverage are now battling a maze of bureaucracy from these companies who want nothing more than to take the money and run. Other people got coverage through California's FAIR plan. But much like with Citizens Property Insurance in Florida, it is just so unprepared to pay people what they lost. Currently, the FAIR plan is on the hook for $5 billion worth of damages, and yet only has $377 million to dish out for claims. But hey, at least California's insurance commissioner got to work and put a 1-year moratorium on insurance non-renewals and cancellations on January 9th. Otherwise known as 2 days after the wildfires initially started, and months after several insurers dropped the policies of SoCal residents. Because again, state governments regulate insurance companies the way I regulate eating Gushers in bed, in that they basically don't. Or when they do, it's too little too late. These national insurance providers have blamed regulations and worse disaster risks for why they're pulling out of California, even though for the last 20 years, they've made 3% more profit in California over the national average. So, like Florida, the state now has to find ways to keep them here. For example, the state insurance commissioner passed new rules that allow insurers to set premiums based on computer models of future exposure and risk, rather than the more transparent method of basing premiums on past exposure and history of the property. And of course, can you guess who controls the computer modeling system? Can you guess? Can you? Ooh, such a good guess, but no, it's the insurance companies. Very fair and not at all easy to abuse. It should be noted that there are over 5 million housing units that meet with undeveloped wildland vegetation that is susceptible to wildfires. So that's a good chunk of people that the insurers can gouge with higher rates. In exchange for the rule changes, the insurance commissioner has forced the companies to provide policies for at least 85% of people living in fire areas. Hey, good. Except he gave them 30 years to reach that 85%. 30 years! You'll all be dead by then because of the laser. We won't even have fires at that point. We'll have something called hyper fires. Now, the hope is that eventually these newer rules will attract more insurers and that prices will even out in order to stay competitive. Assuming there will still be homes to insure by then, I guess. And while California is the hot spot for disasters, it's not the state with the biggest insurance pullout. That prize likely goes to Louisiana, the booze and boot state. Not a stranger to pullouts, am I right? I am right. And speaking of getting fucked, they might be suffering the worst home insurance rate hikes of any other state, at least in the union. Kudos to them. I'll get you all a king cake for that pretty baby of yours. Adorable, not creepy. Not creepy, adorable, not creepy. Many of the hikes are due to dozens of insurance companies either leaving the state or going bankrupt over the last 3 years. Much of this had to do with consistent and frequent climate change disasters, most notably Hurricane Katrina. This forced a giant number of residents to choose the last resort state option, Louisiana Citizens Property Insurance. You can probably assume where this is going. Much like, some kind of building disaster, Louisiana created the perfect storm of dicking over their residents. A dick storm, a dicknado, a girthquake. Since 2008, the state offloaded thousands of Louisiana citizens' property insurance customers onto smaller private insurance companies to help provide coverage. These private companies artificially kept rates low to attract more premiums. They also spread their profits to a network of affiliate agencies that aren't affected by regulators. This all seems safe and good. It's the perfect money-making plan that could only be ruined if if a state had back-to-back hurricane disasters within a year's time. Oh, right, that is what happened. And one by one, all of these companies began to sheepishly open their big wallets to show moths flutter out. According to the CEO of Southern Fidelity Insurance, one such company, this was the fault of policyholder lawsuits. It wasn't his fault they couldn't pay, you see. It was the darn people who weren't getting paid. Unrelated, Southern Fidelity also spent $5.7 million on a 1,300-acre compound/hunting lodge/residence for, I'm gonna guess it's the CEO. Yeah, it's the CEO who blamed lawsuits. Oh, that is related after all. Man, the mob would have a field day with these guys, wouldn't it? I'm actually really pro-mob today, probably because they helped me with my casino, but these reasons help too. So after this collapse, Louisiana's insurance commissioner had to act fast by lowering regulations to attract insurers, specifically abandoning the state's 3-year rule, which prevents insurers from dropping policyholders who have been in business with them for 3 years or more. Cool. That'll do it.
If you were to get rid of the 3-year rule in Louisiana, you would see a large number of people, particularly south of I-10 and I-12, be forced off of their insurance policies. Their policies would be canceled. And when those policies are canceled, they're going to be sent onto citizens' policies, where they're going to be, by law, charged 10% more. That means that we've effectively made home insurance less available by forcing them onto the insurer of last resort's books, and less affordable by charging them 10% more than the market price. That's pouring gas on the fire.
Yeah, that nerd is correct. If you can't make them stay, they're not going to pay. That's what I say in this rhyme. Anyway, should another big storm hit, the private insurers are just going to flee again and leave the state insurance with the bill, which is already past due in trying to pay out claims adding up to over $1 billion from the past few hurricanes already. But, maybe they won't have any more big storms anymore in Louisiana. And just to stress it, this is basically the dance every state is doing. We're just picking on the coastal ones because they get that sweet ocean breeze. But Colorado, Oklahoma, Nebraska, and Kansas have some of the highest premiums in the country. The reasons for this range from lack of regulation, more dispersed housing, which means fewer customers to compete with, and of course, worsening climate events such as hailstorms and tornadoes. This is with virtually none of the state insurance commissioners denying requests for an insurance rate increase. No one has our backs here, it seems. And what makes this so important, besides the actual housing crisis, is that this really just seems like a taste of things to come across the board when it comes to climate change. There is an existential threat looming over us, a growing disaster that simply needs to be solved, whatever the cost. And while half of our political class claims it's not even happening, the first concern we're seeing is how to protect profits. But climate change simply doesn't care about capitalism, the same way Godzilla doesn't care about building codes. It's just gonna happen to us. And we can't really be concerned about whether or not the insurance industry makes sense anymore, which it super doesn't. This is so very akin to rearranging the deck chairs on the Titanic. It so clearly doesn't matter to anyone if a niche group of insurance executives are making money. People are having their homes destroyed because of escalating natural disasters. And now we need to figure out how to give them new homes and perhaps, reduce the rate of those disasters, if there's time and if we feel like it. Decades ago. The problem isn't actually complicated unless we make it complicated. And while we're probably not going to solve climate change in this episode or in any episode or in real life, we can at least think about ways to deal with this home insurance hogwash. Luckily, increasing disasters happen everywhere, so perhaps we can peek at our neighbors' work to see what they answered on the test. Because other countries definitely like and want to help us right now because we're so trustworthy and kind. Ugh. Let's do the ads.
Did you know that less than 2% of Americans are farmers, but 100% of us eat? That's true, right? It's just simple math. And here is some more maths. 4 companies control more than 80% of the U.S. meat industry. You got old J.D. Rockefeller downtown deciding how animals are raised instead of small family farmers. But you can help change that and get some great meals in the process with Moink. Their meat comes from animals raised outdoors right here in the U.S. No pesky tariffs to worry about. No meth to do in your head. Just that good feeling that comes knowing you're supporting farmers who are getting a living wage. So support American family farms and join the Moink movement. Today at moinkbox.com/more news. Not to overload you with numbers, but here's one for you. $0 when you sign up through our link. You will get free wings for life of the subscription, of course, and obviously. They are the best wings you will ever taste for free, but only for a limited time. Spelled MOINK box.com/more news. That's moinkbox.com/more news. Stick it to old JD Rockefeller.
This year, it's hot savings summer. Folks, it's so much easier to do the hot blank summer thing when you don't have to work out or wear a certain thing to participate. Finally, a hot something summer I can enjoy. All you need to do is say goodbye to your overpriced wireless plan and sign up with Mint Mobile, where plans start at just $15 a month. You can keep your old phone and phone number, and all plans come with high-speed data and unlimited talk and text, delivered on the nation's largest 5G network. That's right, 5G is part of hot savings summer too. The two things aren't mutually exclusive. It's hot, it's savings, it's 5G, it's summer, baby. So this year, skip breaking a sweat and breaking the bank. Get your summer savings and shop premium wireless plans at mintmobile.com/more news. That's mintmobile.com/more news. And now it's time for Hot Disclaimer Summer. Upfront payment of $45 for 3-month 5 GB plan required, equivalent to $15 a month. New customer offer for first 3 months only, then full price plan options available. Taxes and fees extra. See Mint Mobile for details. End of summer. Summer's over, folks.
Friends and well-wishers, I am not going to lecture you about how to take precautions for your home. After all, you probably don't have Marie Schrader, the character from Breaking Bad, played by Betsy Brandt, constantly lurking outside your home waiting to steal things. But I do. She's out there right now. Specifically, I'm talking about Marie from the earlier seasons of Breaking Bad, where her compulsive stealing was a common B story. If season 5 Marie was outside my home, I wouldn't worry at all. But since it's season 1 Marie out there, I need to take precautions. And that is where Simply Safe comes in. They were named the best home security system of 2025 by CNET, and their Active Guard outdoor protection is setting a new standard in home security. I trust Simply Safe over every other option out there to help protect my home from Marie, who I assume got over her compulsive stealing problem after the season 4 episode open house, after which it's just never mentioned again. I don't know. Maybe she's still stealing stuff amidst all the other chaos. I don't know. And honestly, I don't want to know. But you can get 50% off your new Simply Safe system with professional monitoring and your first month free at simplysafe.com/more news. In fact, I'm going to say that 2 more times loud enough that even a still developing character of Marie can hear, okay? simplysafe.com/more news. That's simplysafe.com/more news. There's no safe like Simply Safe.
No, I meant shred like a wicked guitar solo. Please, I didn't threaten your family. No. I had no idea your uncle was killed in a wood chipping accident. Well, had I known, I would have used a different method when I threatened to kill your family. Wait, no! They hung up. Goddamn insurance! Everyone hates it, but you gotta have it, apparently. I mean, it's a thing we made up, like money, but we gotta have it. The thing no one likes that we made up. So we pointed out that other countries have homes, I think, and those other countries also have disasters. And one would assume those other countries may have figured something out here. In fact, Canada, Japan, and Australia pay significantly lower rates in homeowners insurance despite facing the same climate issues and inflation rates that we do. And there's actually a really obvious thing that we should do that might mitigate the problem at least a little bit. Let's see if you can pick up on a pattern here. Australia has a cyclone reinsurance pool grant, which facilitates the spread of liability across insurance companies, otherwise known as reinsurance, for areas impacted by cyclones, or as the Aussies call them, skykangas. Canada is creating a national flood insurance program for high-risk areas, or as they call it, I forget what Canadians sound like. Floods! There it is. And then, as you may expect, Japan's government offers private insurers reinsurance whenever there is a massive quake, or as the Japanese call it, jishin. I learned that from Crunchyroll. That dan is wild! None of these methods are perfect. But again, all of these countries have lower insurance rates than America. And you may notice that the answer each time is just for the freaking federal government to step in and help. Like in all of this, perhaps it occurred to you that the United States doesn't regulate the insurance market at the federal level and doesn't even collect data from insurers. That's such a basic failing. It's like we're trying to fix a car that doesn't have wheels. Like many things, we just have to pay for it. The government collects all our money, right? Presumably, they have that money somewhere. Like maybe they buried it under the Washington Monument, and they just have to use some of that money toward this thing. And I don't know, maybe throw renters a bone too, like backing renters insurance and perhaps tossing money toward first-time home buyers. Hey, that would have been cool. What a cool idea. We should have elected her to be president instead of whoever is the president now. The snag, however, is, well, we kind of have a bigger problem right now. And so sadly, this situation is only going to get worse as insurance companies take advantage of further deregulation while Trump tries to gut FEMA because someone forwarded him an email saying they harbored non-white migrants or some shit. We're in a very stupid situation and have like a million steps to take before we can even think of creating some kind of federal regulation for home insurance. I mean, I'm always a fan of being solution-oriented, but this is like Googling herb garden ideas while being eaten by a boa constrictor. But if you're curious, the first thing we need is to reevaluate and rethink how we design our cities, if we aren't going to do something about climate change. There should be an option for people to be bought out of disaster-prone areas so they can relocate. And then we need to restrict further development in those disaster zones. Basically, people actually should be able to sell their house to Aquaman and move. But since there's no Aquaman, it'll have to be the government. Until we get an Aquaman, God willing. Or we can do something about climate change. Another series of solutions would be to have our government grant federal and state incentives, tax credits, and hell, just give citizens money to put towards hardening homes, fire breaks, forest clearing, and other proven practices that can lower the risk of property destruction. And do this for everybody, and do it right. After Katrina, many poorer Louisiana residents were dicked by their state's funding program and had to rebuild their homes with shoddy materials and contractors that left them even more vulnerable to hurricanes than before. The point here is to make it right the first time so we don't have to keep spending the money. Or we do something about climate change. That's always an option. I'll leave that right there on the table if anyone wants it. It looks pretty good. Are you sure you don't want it? It's good. Take it, please. Okay. We also need to force our representatives to fight back against insurance companies and hold them to higher standards. A seemingly Herculean task, I know. But, for example, this California bill, which failed, would have been good. If it passed, it would have forced insurance companies to give customers discounts if they took specific actions to mitigate fire damage. It's weird they didn't pass that. It's also weird that we would have to force these companies to do something like that. But we super do. Just like we have to force our politicians to force the companies to practice basic decency. But we do. With this and with climate change. And really everything. Because again, it's a microcosm of the larger problem. We can't assume that if things get really bad, our government and large corporations will suddenly become altruistic and everyone will band together and finally solve the issue. That would be nice, and I hope. But more likely, they'll just try to monetize our waterlogged corpses. We have to make them do the right thing because they have no moral compass. They are not people. Remember how I said that insurance companies make money by investing our payments into interest-generating assets? Well, one of the areas they invest in is, no joke, the fossil fuel industry. Of course they do, and those fossil fuel industries also happen to donate towards campaigns for state insurance regulators that happen to fight for looser regulations for insurers to do business. So climate change raises premiums, forcing us to pay insurers to invest in fossil fuels, which exacerbate climate change and support insurance companies. It's a scam. They're doing a big scam, except the mark is the entire Earth. They're literally in a symbiotic relationship where they siphon money from people hurt by disasters they are making worse. Like if Batman and the Joker were business partners. Sorry, Bateman.
Having insurance isn't the same as having State Farm. It's like getting Bateman when you need the protection of Batman.
Easy, Batemobile, not too fast, baby.
Ah, cool ad, State Farm. Must have cost a lot. Maybe you could have used that money to not drop all those homeowners in LA. You know, like a good neighbor. I should mention that a lot of insurance companies have, to their credit, stopped investing in fossil fuels over the last decade. But not State Farm. Both State Farm Insurance and Berkshire Hathaway just doubled down on investing, making up for any other insurer that has dropped off or lessened their investment in big oil. State Farm even hires the same lobbyists as them. They're insects. Mindless money insects. If nobody limits them, they will just keep eating us until there's nothing left, until the earth burns around them while they play Mario Kart in their luxury bunkers. They're bad, is what I'm saying. I think I hate them. And we don't have time for their bullshit. Fuck it, Warmbo, I'm sorry, buddy. You just got to stay shredded for a little while longer. It's a matter of principle.
That's okay. Warmbo's flesh is merely a facade, holding back the infinite rift which feeds off the pit of despair in every man's stomach.
Yeah, that's what I thought it was. He's fine. It didn't even hurt him. He said it tickled. He was like,
Ha ha, that tickles.
Remember that? From the 90s, which was 30 years ago. Look how I massacred my boy. Thanks everybody for watching. Make sure to like and subscribe and leave a comment. You can say whatever you want down there. There's no rules in the comment section unless there are. I'm not familiar with the guidelines. We've got a podcast called Even More News. You can check that out at the podcast store where you buy your downloads of podcasts, or you can watch that show on our YouTube channel twice a week. You can also check out our patreon.com/somemorenews. You can also check out our merch store. That's a URL on screen for you, describing the letters in order that you type to go to that website. You can get Warmbo's body and face on a shirt to commemorate our tragic loss of his particular shell today. He'll be back. It's fine. He's just here. Like, obviously we didn't cut him up.